And now to high interest, a look at what's making headlines around the world. Torrential downpours unleashed flash flooding around New York City last night as slow-moving thunderstorms tore through the tri-state area. Flash floods were reported across New York, New Jersey, and Connecticut, closing roads and highways, submerging cars, and stranding motorists. Some people didn't make it to work today. The European Union has finalized a second list of countermeasures to target U.S. goods worth $84 billion, including Boeing aircraft, cars, and bourbon, if it decides to retaliate against U.S. tariffs. President Trump said he is still open to trade negotiations with the European Union. And Treasury Secretary Scott Bessent suggests that Fed Chair Jerome Powell should step down from the central bank's board when his term as chair is up next May. He joined Bloomberg TV earlier today.
Traditionally, the Fed chair also steps down as a governor, and there's been a lot of talk of a shadow Fed chair causing confusion in advance of his or her nomination. And I can tell you, I think it'd be very confusing for the market for a former Fed chair to stay on also.
And of course, today we're watching the banks very closely. JP Morgan CEO Jamie Dimon saying the private lending industry may have hit a plateau.
You may have seen peak private credit a little bit. I've mentioned that credit spreads are very low. It's grown dramatically over time. And, you have to pay up a lot for it. I'm not saying it's not going to grow some more, but I would have a slight reluctance depending on who it was.
It's good timing. We're going to get right into it with somebody at the very center of the private credit industry, Craig Packer, co-president and head of credit at Blue Owl, one of the biggest firms in the industry. What do you make of these remarks? At the same time, you see JP Morgan building a whole new business in the last 24 hours to cater to public and private markets, while Jamie Dimon is saying that maybe the industry has peaked. What are you seeing?
Sure. Well, thanks for having me. We continue to see demand for the products. Institutional investors, private wealth investors around the world who continue to deploy capital because they're attracted by the yields. The yields in the asset class are still very high, and they're still higher than you can get in the public markets. We see continued secular shift to private credit and direct lending in particular, and we're not seeing any change in that. Even after tariffs, where you thought you might see a slowdown, there's a little bit of a slowdown, but certainly nothing that you would call a plateau or a peak.
Well, let's talk about the opportunity sets from where you're sitting. Is there still a viable enough space to invest in? Actually, I wasn't speaking to JP Morgan's JP Dimon, but JP Morgan Asset Management CEO George Gatch. He made the point to me that there's a lot of money and investors chasing finite opportunities in the private credit space. I wonder what that looks like from where you're sitting.
Well, we're finding plenty of investments to do. We'd like to see more. M&A, particularly private equity LBO, continues to be modest. But we have a significant investment in origination, and we are very successful at financing some of the biggest deals. Just in the last few days, there was announced an acquisition for a company called PCI. It's in the healthcare space. We are leading that financing. It's a $4+ billion financing and a $10 billion company. This is at a time where the syndicated public loan markets are at record highs. So there's enough to do for the larger firms that have invested and have the relationships. We also have 400+ portfolio companies that constantly need financing. So we'd like to see more, but our funds are in their target leverage range, and we're able to deploy the capital at attractive returns.
Some numbers. I stole these from Goldman, which is also forming a new or bigger private markets business, rather private credit. $2.6 trillion market in high yield loans, $1.5 trillion in institutional loans, $1.5 trillion, $1.7 trillion in private credit. So private credit actually already increasing in size relative to the institutional loan market. When does it increase over high yield? Do you see it surpassing?
Well, the way I look at it is all of those products serve the broader leverage finance market, and they finance sponsor-backed companies. Sponsors are sitting on $1 trillion plus of dry powder, and that deployment of that dry powder are going to feed all of these markets. The relative mix might move around from one year to the other, but the secular shift over the last 10 years that we've been in business has been towards direct lending. Today, using the numbers you just said, it's about a third, let's call it. I think that can continue to grow over the next 5 years. There may be within a year where you get a cycle where it shifts a little bit more, a little bit less. But the private equity firms like using this type of capital for the privacy, the certainty, the customization, and the investors are getting great returns, and they're continuing to deploy that capital. So I think it will continue to grow.
On the topic of deployment opportunities, you mentioned that you have 400 portfolio companies that are in need of financing. You'd like it to be more. Can you put a number in terms of how many more? I mean, do you have a target in mind for how many portfolio companies you want to be working with?
Well, there's two concepts that you're raising. We as a lender, we're really trying to manage risk. And so it's core to that strategy is being diversified. So in that sense, I'd like to have more portfolio companies because it's a way to spread our bets over more companies. We also like having the opportunity to finance bigger companies and newer names. We built this business from scratch 10 years ago. We're at 400. In the next couple of years, I'd like to see that be 500, 600. But look, we only close on about 5% of the deals we do. So I don't want to confuse the concept. We're only going to do the deals that pass our screen. We're very selective. But I'd like to find more that work for us and continue to de-risk the portfolio.
Speaking of de-risking, being choosy here, there was a lot of worries about the broader economy still. I think it's really reflected in the private capital firm stocks. Apollo down more than 10% this year. Blue Owl down another 17%. Ares is roughly flat on the year after big gains last year, to be very sure. But what is that reflecting? You look at investors and they're saying, what's got a crack here? Where are you seeing strains in the broader market, if not your own portfolio?
So our portfolio is doing really well. We're cautious like everyone because you worry about the economy. We lend to a small subset of the economy that's generally recession resistant. Software, healthcare, insurance brokerage, food and beverage. Those sectors continue to hold up. We continue to see low single-digit growth quarter over quarter, high single-digit growth year over year. The companies are doing really well. So I feel really good about our companies and their performance. We're all wondering about how the economy may play out over the next 6 months, 9 months. But even in a modestly weakening economy, I think that we'll do well. In terms of the stocks, I'd like to see them higher. I'm sure any shareholder would. I think that for us, we're not in the private equity business ourselves. I think sometimes that can get lost. We're in industries like credit and real estate that generate predictable income. There's continued demand for those products. And we think over time, our earnings, we've grown a lot, we'll continue to grow a lot. Our performance should hopefully reflect in a higher stock price.
Well, when it comes to concerns about the economy, some of the things that Shonali mentioned, a trend that we've been talking about on this show is that when it comes to the private credit landscape, you are seeing more of a shift to investment grade deals within private credit. Is that a shift that you're pursuing as well?
Yep. So I'm glad you asked because I think sometimes this concept can be confusing. The broadest umbrella is private credit. That just means a loan that was originated privately, not through the public markets. We started our business in a subset of private credit, direct lending. That's financing sponsor-backed companies, typically with cash flow-oriented loans. It's the biggest part of our business. But the other area of growth is private credit for investment-grade companies. We did 2 acquisitions last year. One was in the alternatives credit space, a business called July18 Capital. We also got into the insurance space. And in those 2 businesses at the intersection, there's the opportunity to make private loans to companies that are investment grade. Obviously, you don't earn as much, but we're seeing growing appetite, particularly in the insurance space, for those types of solutions. And so we're relatively small in that space. It's an area that we can grow. Some of our peers are in it in a substantial way. But this private credit market in the investment grade space, there's tremendous growth potential measured in trillions of dollars.
Craig, we've got to leave it there. We thank you for joining us here today. Of course, that is Craig Packer, who is the co-president and head of credit at Blue Owl, of course, one of the largest firms in that industry. And Blue Owl very closely tied to the data center world, and we have somebody else coming up next who is too. We're going to talk about AI and power, nuclear energy in particular, with Oklo's CEO, Jake DeWitt. This is Bloomberg Open Interest. let's get a check on the stock market right now because we are higher on the S&P 500 by and large, but under that 6,300 level we hit a little bit earlier. So what's bringing us up? NVIDIA is the biggest gainer on a points basis here. Of course, a lot of love there with the prospect of earning more revenue out of China. You have Broadcom also higher and a lot of other big tech names, Broadcom, Microsoft, Advanced Micro Devices, Amazon, Alphabet, just a lot of love there, but not everywhere. Interestingly enough, on a drag, you have Meta Platforms on the downside as one of the biggest points losers, but a lot of financials really dragging down the day. Wells Fargo, about 4.7% lower on the day. BlackRock, more than 5% lower, one of the worst points drags and having its worst day since the first week of April. Now, look at the industries here. Really interesting. You're only seeing one in green, as we've been talking about information technology, but the rest of the world in the red really for the day. Dragged down mostly by the materials index. Katie, you have healthcare also lower on the day. And as we've been saying, that big start, the big bang to big bank earnings, not as colorful as you would expect here. A lot of fluctuation in the stocks into the trading day. But of course, we have more earnings ahead in the coming days.
Yeah, absolutely. From the big banks. And then we got into tech. And speaking of tech, we'll unpack some of the deals in the tech space with Kristen Rock, the Clark of Barclays next. This is Open Interest.
Investment banking is coming back, and so are IPOs. You have investment banks like JP Morgan this morning beating on many of those investment-based business lines. Barclays, one of the investment banks, seeing a lot of IPOs around the corner as well, at least relative to last year. So for that, we're going to bring in Kristen Roth de Clark. She's Global Head of Tech Investment Banking at Barclays, joining us now. How good can this year get? You're finally seeing some love, and the pops that you're seeing are nothing short of stunning. If you strip out Circle, how well are these firms doing, and what type of activity is it going to encourage?
Well, I would say we're halfway through the year, and May and June were by far the busiest months of activity. As it relates to IPOs, yes, even stripping out Circle, the performance of tech IPOs has been up 30% on average. With Circle, that number in June was like up 85% on average, but still, most of these deals are working incredibly well, so that's providing a nice backdrop for investors.
CoreWeave, for example, another one we keep talking about, obviously in the tech space as well. That IPO has done super well. I want to talk about the fact that you just have more numbers of IPOs coming to market. And even this summer, which is maybe a sleepier time, it doesn't seem to have slowed us down at all. So with that sort of setup, what is the fall, what is the winter shaping up to look like?
Yeah, so I think by the end of July, we will have 9 kind of core tech IPOs so far for the year. By the end of the year, I expect around 15. Last year, for comparison, there were 8 tech IPOs total, and 3 the year before, so a meaningful increase. We're still not back to the average over the last 20 years, which is kind of 22 IPOs a year, but a meaningful increase. And I think that that's something that we're actually seeing companies pull forward their plans from 2026 to look at Q4 potentially for an IPO.
Really interesting. I'm glad you brought up CoreWeave. When CoreWeave went public, you might remember that so many people were talking about the leverage and the relationship to the private equity industry. And that seems to be a quality of companies that are now coming to market, given how much private equity has been sitting on companies for so long. It used to be, you can just kind of settle with a VC-backed company and be okay with it. How much are investors getting comfortable with leverage on top of companies going public?
Leverage is investors are comfortable with a certain degree of leverage. I think net leverage around 4 times or less at the time of an IPO is a very comfortable level. And that's kind of rule of thumb in a normal environment. So it's certainly not constraining companies from going public.
And how much, let's talk about earnings season a little bit, because, we're looking down the barrel there. We have big banks this week, and then we get some of the big tech names. And how much, are some of these companies, these tech companies in the pipelines, looking to see how tech earnings are received? Because it was really rocky towards the start of the year. Then you had things pick up a little bit, and now you have a bunch of tech IPOs.
And it's too early to look at the impact of potential tariffs, I think, with Q2 earnings. But what investors are really focused on is going to be AI as the impact on margins, but also how companies are future-proofing their businesses. And that, I think, will be the biggest focus for tech earnings in Q2.
How do you think about big tech companies right now in general? When you are looking at them spending their money, you're seeing kind of these major hires that they're spending top dollar on, as well as these investments like Meta into the maker of Ray-Bans, for example. Are you seeing different uses of capital competing with pure strategic M&A?
I would say where there is activity around AI in M&A, it really is around hiring people and IP. We haven't seen large-scale AI-related M&A activity, but it is certainly on these acqui-hires or IP.
Yeah, acqui-hires. That's interesting. And given that seems to be the flavor of the M&A that we're seeing right now, do you expect that will change anytime soon, that it'll become more about just, scaling up more traditional sorts of M&A?
Yeah, and actually, if you look at the M&A volume for tech this year, volume's up 50% versus last year, but number of deals is down actually 15%. So we've seen larger M&A M&A transactions. And heavily weighted towards strategic deals. Typically in tech, half of the activity is private equity to private equity, and the other half is strategic. This year, we've had about 70% that's been purely strategic.
Big prediction for the second half of 2025.
big prediction, I will say, is an increase in something new, is an increase in convertible bond activity. So that's something we've seen pick up really meaningfully in the month of June. We are back to zero coupon convertible bond offerings, which we haven't really seen since 2021. And the activity level in June was almost half of the full year activity. And a lot of the larger cap tech companies are taking advantage of that because they have strong stock prices, the compression in credit spreads we're seeing, and also just the volatility, taking advantage of that volatility and being able to act on it.
It's tempting to marry together what you're saying about convertible bonds. We were talking a little bit about crypto SPACs in the break. You could see a case for combining the two of them and saying things are looking a little bit frothy here. Would you extrapolate that far?
I don't think we're to where things are actually crazy frothy, because if you look at multiples in the industry, we're still, for technology companies, we're not back to where we were at go-go levels in 2020 and 2021. We're at multiples that are more sustainable over a longer period of time, and that to me is where you start to tip the scales around froth. Certain sectors, sure, there are pretty meaningful tailwinds, especially as it relates to perceived government actions around crypto, around defense tech, around security software, are trading at more significant multiples.
All right, the halcyon days of 2021. We're not quite there yet. Kristen, it's great to see you. Thank you for joining us. That is Kristen Roth DeClark. She is Global Head of Tech Investment Banking over at Barclays. Let's get a check on these markets right now. We're about an hour into the Tuesday trading day. You can see the S&P 500 trying to hang on to gains. Some of the momentum fading at the big benchmark level, but the NASDAQ 100 hanging on to its gains. The NASDAQ 100 up about 0.6%. You can really thank NVIDIA and some of those chip names for that. The 10-year yield higher by about 4 basis points if you round up. A little bit of a sell-off when it comes to the long end, Sonali.
Katie, we are knocking on the door, aren't we, of 4.5% once again?
We're just glued there. I wake up every morning and I say somewhere the 10-year yield is trading near 4.5%.
I missed you. I appreciate that. Let's look at some single stocks moving at this hour as well. Uber is tapping China's Baidu to launch robo-taxis in Asia and the Middle East. Wells Fargo, though, the worst performer. I'm really struck by the move you're seeing here. The asset cap is lifted. The stock is down 5%. The worst performer in the S&P 500 on a points basis after cutting its net interest income guidance. And Katie, Matt Miller's not here, but he watches this company very closely. A lot of traders he talks to are really glued to Trade Desk, up 9% now today.
Joining the S&P 500, I believe, on Friday. I love stories like these index inclusions and removals because it just speaks to how important that passive bid is. So Trade Desk up about 9%.
Rebalancing is a favorite trade for sure. Now, coming up next, looking forward to talking about this. The president is set to announce $70 billion in artificial intelligence and energy investments out of a summit out of Pennsylvania. We are going to speak to Oklo co-founder and CEO Jake DeWitt on all of these investments and where they are going next. This is Bloomberg Open Interest.
President Trump is pushing the White House to accelerate AI development. He is set to announce $70 billion worth of investments in AI and energy in the state of Pennsylvania this afternoon. The money will go towards new data centers, upgrading the state's power grid, and developing AI training programs. Joining us from the announcement site in Pittsburgh is Bloomberg Washington correspondent Tyler Kendall. And Tyler, we know at least $6 billion of the $70 billion. CoreWeave coming out with that announcement this morning. Who else are we expecting to take the stage, if you will, today?
Yeah, hey, Katie, there's going to be a range of executives that have come here to Pittsburgh for this announcement. And actually, we can give you an update, which is that Senator Dave McCormick's office, the office that is throwing this event here in Pennsylvania, has actually updated that $70 billion to $90 billion worth of investment that's expected to include about $25 billion from Blackstone. We know that their chief John Gray is going to be here. Bloomberg News is reporting that they're going to talk about this idea of investing in both AI data centers, but also the energy infrastructure that is really needed to power this technology, because that is one of the key themes that we are watching closely here today. It's actually hard to pinpoint the exact amount that AI uses when it comes to energy consumption, but what we do know is that that consumption, that demand, it's growing. A recent analysis from Goldman Sachs shows us that AI data center electricity energy is expected to go up by 160% by 2035 compared to now. So there's a big conversation here on the ground about what sort of energy sources are going to be used to power that when we do see this really big uptick in investment to get AI up and off of the ground. In fact, I actually spoke to one member that represents the oil industry, the head of the American Petroleum Institute, who told me that part of this conversation is actually about getting carve-outs for tariffs, that this industry is looking for ways to perhaps ease the burden on tariffs so that they can help the administration boost production to fuel AI.
Tyler, when I look at the list of people who are attending, it's BlackRock CEO Larry Fink, it's Bruce Flatt, of course, of Brookfield and Brookfield Asset Management, it's John Gray, the president and COO of Blackstone, Nir Bardea, I believe, is also going to be there, the CEO of Bridgewater, David McCormick, of course, also the former co-CEO of Bridgewater. Did David McCormick here reach out to all of his former colleagues across the industry, and is this going to be a model for how public-private partnerships are going to be done moving forward? It's kind of like the New Virginia in a lot of ways. I feel like you saw Glenn Youngkin do a lot of similar things.
Certainly, and that's something that the administration is definitely hoping for. White House officials have really taken sort of a broad-ranging approach when it does come to trying to ensure the U.S. stays ahead on artificial intelligence. Some of that is what they're working on the side of deregulation, for example, that we hear a lot, but the other is really trying to get to these investments. So I think the administration would tell you that they have definitely welcomed what has been the Senator Dave McCormick trying to bring together all of these different sides and factions. Now, that doesn't mean that it's going to be easy. Of course, there is still a lot of competition in this space and still a lot of big questions when it does come to regulation for artificial intelligence and different things that the private sector is lobbying for. When you look at some of these tech companies and what just happened with the reconciliation bill, they weren't too happy with ultimately one of the provisions that got stripped away that would have provided a moratorium on state regulations over artificial intelligence. So it's definitely still an emerging conversation here, but it's something that the administration is trying to tout.
All right, Tyler Kendall, looking forward to your coverage throughout the day. That is Bloomberg's Tyler Kendall joining us from Pennsylvania. And for more on the president's energy investments, we're joined now by Jake DeWitt. He is the CEO of Oklo. Oklo is developing fast fission power plants to develop clean, reliable, and affordable energy at scale. Jake, it's great to have you with us. For many, many years, investors hadn't been looking at nuclear companies. That has changed in the past couple of years, but I think there's still some groundwork and explanation that needs to be done. So just give us an overview of where Oklo fits into the ecosystem of nuclear, because as I understand it, you produce these small modular reactors rather than full-scale, full-size nuclear plants.
Yeah, well, thanks for having me again. I think that's one of the interesting things is some of these small plants match really, really well with how actually like data centers get built. Not to mention just broad reindustrialization as a whole. At the end of the day, like a lot of these data centers are being built out. Maybe they are at scale using a gigawatt or so of power or more, but they're getting built out in chunks that are typically using, 50 to 70 megawatts kind of per data hall or whatever you want to call it. And then you stack those up to ultimately get to where you're going. our sizing allows us to actually match that really well. And that's one really nice thing about smaller plants. But another big feature about smaller reactors is they can just be built differently. They're not nearly as big. They can be built faster. That can open the door for significant cost savings. I think one of the things that people tend to think about is, oh, nuclear is really expensive. It just doesn't have to be, right? It's actually really materially efficient. It uses the fewest materials per megawatt hour of any energy source. And some of these next generation reactors like we're working on actually will help us unlock that potential.
All right, really appreciate that context there. And with that in mind, give us an update on where you are in the timeline of delivering your reactor to the market. As I understand it, you don't yet have a license from the Nuclear Regulatory Commission. Can you give us an update there?
Yeah. So none of these kind of new reactors have received the full license to build and operate, like the commercial licensing to do that. But with all of the recent activity dating back to the Advance Act last year to the president's executive orders this year, there's a pretty steady drumbeat accelerating the regulatory cadence. We are pretty uniquely positioned. We have a site use permit at the Department of Energy. We actually have fuel for our first plant, and that's one of the biggest bottlenecks right now. And all of that's been allocated to us and awarded to us. And then we've been sort of in the regulatory game doing what's called pre-application dating back to 2016. We're completing out phase 1 readiness assessment now. It's kind of jargon to say we're making progress towards submitting the actual application by the end of this year, which will then position us to, hopefully be able to turn the plant on sort of in the late 2027 timeframe, and then ramp into full power operations thereafter. So that's kind of the positioning we see how this is moving forward. There's a lot of tailwinds that are really helpful here, especially from the executive orders to accelerate some things. But part of we announced today too, we picked kind of our general constructor for that plan. So that's going to, we're all sort of making progress on the actual get the permitting in place, break ground, get the plant built. Actually demonstrate you can do all these things in a pretty cool way.
Very much appreciate the updated timeline, Jake. I have another question, too, about your relationship with Sam Altman and OpenAI as well, because back in April, it was announced that Sam Altman would be stepping down as the chairman, partially to make it easier to work together. How has the relationship evolved, and how far do you see it going? Can you give any specifics about the way that the two companies have been working closer together?
Yeah, I mean, Sam was with us since pretty much the beginning. I mean, before we even founded the company, we got to meet Sam. He became a friend of ours, mentor. Then, we started the company, became our first investor, first board chair, stayed that way all the way through. And so obviously, we remained friends. The thing now, though, was as we kind of reached this stage of working with OpenAI and other companies, potentially, we needed to sort of make sure we could have a clear path to do that across the board, honestly, right? Not just with OpenAI, but some of the other major players in the hyperscale space. So we continue to progress those conversations. There's obviously no shortage of interest. The right thing is finding the right ways to structure these partnerships and pick the right ways to go forward. You don't want to just run on sort of saying, hey, we're going to sign this deal and do a power offtake agreement today. You actually want to build a nice dynamic of creating a competitive environment and figure out who the right partners at a strategic level are, especially in light of the policy environment today where there's so much opportunity to do different things and creative things, help unlock and accelerate some of the actual bottlenecks to deploying nuclear meaningfully at scale, which really have to do a lot more with certain supply chain aspects than they do with like permitting and other regulatory dynamics, especially on the tails of, the legislation last year in the Advance Act and the executive orders. So at the end of the day, I think this creates a pretty favorable environment to basically form some very strong strategic partnerships with a few players in the space to move this forward, to not just like make, building new nuclear inevitable, but actually making the scale up of it inevitable and faster than what people have thought before. It's a great place to be, frankly.
Right. Yeah. And I hear what you're saying, that you're taking a thoughtful approach to these partnerships. You don't want to necessarily rush into anything. But if I take a look at the competitive landscape, of course, your peer, NuScale, I believe they're targeting a binding agreement by year end. And with that in mind, when do you anticipate reaching your first binding agreement, if you could put some numbers to it?
Yeah, so we've taken the approach of creating more of a thoughtful build-up of, creating a partnership, figuring out the right ways to meet their needs. The landscape's changing for them all the time, too. I mean, when we first started talking to folks in the data center space a couple of years ago, 20 megawatts was a sweet spot. Now it's like 50 to 70, and you're talking about campuses that are gigawatts, not even like 100 megawatts was big a couple years ago. I think we're going to be sort of pegging out the limits about sort of what you can do at compute density at the rack level and other factors here that are going to drive forward, how you kind of end up locking in some of these I would say sizing and design considerations. So we want to work with them along that path and then figure out, okay, what's the right way to structure these things and then move forward. So I think at the end of the day, I would say I don't want to put a timeline out to say, hey, we should do it by then. Things are moving fast. There are people who would like to do that with us like now, like sooner, but it's in our best interest to make sure we kind of build the right relationship, the right partnership to scale into that. But I do think in the course of the next, 6 to 12 months is when you see some of those things start to get into place, because everything will probably be at the right state to do that. But you just, you got to be thoughtful and mindful of it. But I think that's what's nice about our approach is we, as a power sales, like we're selling the power. Our peers are really trying to get someone else to take the reactor, find someone to build it, them own it, operate it, all that. They just want to hand it off. We actually want to do a full delivery of the power, right? So we make it easier for the customers, which means we can engage in a little more thoughtful process and grow with them to figure out what are the right ways to integrate with them, integrate with other options like partners we have on providing gas as a bridge source of energy, which is a really big feature we can kind of integrate in a pretty neat way. As well as like grid connectivity. So there's a lot of ways that works pretty favorably for us. That mean we want to be thoughtful and deliberate about signing partnerships that kind of escalate and grow rather than sort of holding out for something and then say, okay, this is the right binding one. It's nice to build those up.
We got to leave it there. We thank you so very much for joining us today. Hope to have you again soon. Of course, a lot going on in your world and a lot of timelines you've given us for us to follow up. Jake DeWitt of Oklo. Be sure to tune into Bloomberg Tech at the top of the hour because they will be joined by U.S. Secretary of Energy, Chris Wright, so we can finish the conversation up with him then. Stick with us. This is Bloomberg Open Interest.
People often focus just singularly on an individual family who wants to buy a house, and we have the greatest respect for that. What I feel upset by is the way we treat the renter. We're having the opportunity for people to rent houses in aspirational communities. This is one of the greatest tools for people who, more often than not, if you look at all the residents in our 90,000 houses, most will never own a house in their life. The combination of their FICO scores, the combination of their student loan debt, the way their life turned out for some reason, they will be renters. But they can still raise their children in great school districts. So as a result, from our perspective, we created more access to better communities.
And that was former Goldman partner Don Mullen discussing the housing crisis on the latest episode of my show Bullish, airing tonight at 6 p.m. Eastern on Bloomberg Television and streaming at 8 p.m. Of course, one of the largest single-family homeowners in the country, Freddie and Partners. That's Margaret Anadu over there also speaking as part of the show. And final thoughts, Katie, market is fluctuating between gains and losses, financials, of all things, dragging it down.
Yeah, big optimism coming in today with the big banks, with big tech fading a little bit. We'll continue to track markets, all on Bloomberg TV today, and we'll see you tomorrow for Open Interest.
Bloomberg Tech is live from coast to coast with Caroline Hyde in New York and Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, a US reversal as Nvidia and AMD are set to resume some AI chip sales to China. Plus, we're live from the inaugural Pennsylvania Energy and Innovation event. Our conversations with US Energy Secretary Chris Wright and White House AI and crypto czar David Sachs. An AI startup, Cognition, has agreed to buy what remains of Windsurf for an undisclosed sum. Both CEOs join us later this hour. Let's get back to our top story, and that is that Nvidia and AMD will start selling some AI chips back into China after the administration and US government signaled that they would secure the licenses and approvals to do so. Nvidia continues to push higher. Fresh record highs, $4.2 trillion market cap company. We know the story there. Jensen Huang right now is in China. AMD trading at its highest level since October. There are many questions about why now. Let's get out to Washington, D.C. Bloomberg's Mike Shepard, and that's where I start. The timing of this, Mike, very interesting. What do you make of it?
Well, it's fascinating. This announcement today from NVIDIA in the overnight hours comes less than a week after Jensen Huang sat down with President Donald Trump in Washington at the White House for a closed-door meeting. Now, we don't know what was said in private between the two men, but one thing we do know is that Jensen Huang has been clear in his message that U.S. export controls that have hit his company particularly hard have been a failure and that put U.S. competitiveness at risk. His vision is is that if NVIDIA is unable to sell a modified and slowed down version of its AI chip into China, the U.S. will be ceding that market, in essence, to NVIDIA's chief Chinese rival, Huawei Technologies. And that would set the stage potentially, Ed, for Huawei to then start exporting some of that AI technology into other countries where NVIDIA would also like to have a toehold and bigger footprint. For Jensen Huang, he really wants the global rollout of AI to be defined by what he calls the American stack of technology rather than the Chinese one, Ed.
I think we need to talk about NVIDIA's business here as well, right? This is the H20 chip. And when they stopped shipping the H20 to China, we were able to quantify the impact, at least to the top line of NVIDIA's business. What do we know will happen in the second half of this year in terms of sales and what business they can claw back?
Well, when they released their results for the first quarter, they did report a $4.5 billion write-down related to those export curbs on the H20 chip. And remember, the H20 chip had been redesigned specifically for the Chinese market to meet earlier rounds of U.S. export curbs that were enacted on national security grounds. Now, the curbs, should they stay in place, would have hit the bottom line even further this coming quarter. They were projecting lost sales of up to $8 billion. But that could all change here, Ed.
There's the trade and business case, and then there's the politics. This was Treasury Secretary Scott Bessent speaking on Bloomberg Television earlier today.
You might say that that was a negotiating chip that we used in Geneva and in London. It was all part of a mosaic. They had things we wanted, we had things they wanted, and we're in a very good place. I expect to meet my Chinese counterpart, the vice premier, in the next few weeks.
Was this a bargaining chip, literally, that played into trade talks between the U.S. and China?
Well, it certainly is something that Chinese officials would have raised during the talks. And for the first time, U.S. officials are indicating that the chip export curbs actually emerged as something in the negotiations. It's unclear where they rank, but certainly it helped the U.S. gain access to those rare earth exports from China that American customers had suddenly found difficulty buying as China began to slow down its sales of those crucial products to automakers and other buyers here.
Bloomberg's Mike Shepard in Washington, D.C. Thank you very much. We have some breaking news crossing the Bloomberg terminal, and it involves Polymarket. According to Bloomberg's reporting, both a DOJ and a CFTC investigation into whether Polymarket was accepting trades from U.S.-based users that were in violation of its previous settlement agreements with the federal regulatory bodies have been dismissed. That's according to a Bloomberg source who says that these two investigations from the Biden era are now being terminated. We'll bring you more on that story as we get it, but it's just broken across Bloomberg. Let's stick with crypto. It's been an eventful week in markets. We had tech earnings, but it's also crypto week, which is underway. Joining us now to discuss is Catherine Dowling, Bitwise Asset Management General Counsel and Chief Compliance Officer. And I've got to, Catherine, I want to ask you for your reaction to that story we just broke. I'll go over the reporting. There were two investigations into Polymarket, the U.S. Justice Department and also the CFTC, looking at whether Polymarket was accepting trades. But that was a Biden-era investigation that our reporting says is over. What do you make of that?
You know, Ed, thanks for having me. And it's funny, I spent some hours on the plane last night, and I looked at the number of hours spent on Biden-era lawsuits and investigations, and it was over 10 years combined of man and woman hours spent on these various investigations. What I make of that is part of what we've seen as this tectonic shift of let's get back to fundamentals, and let's make sure that if we're investigating different businesses, that there's really some there. And that really plays into the whole theme of Crypto Week, which is getting to the clarity that the industry has been asking for years.
You're a former assistant U.S. attorney in the economics crime unit, so it's great timing to have you on the program. It is Crypto Week, and what's so interesting on the Bloomberg terminal, there's a lot of contradicting reports, right? There was a report last night that Bitcoin has a lot of room to run because it is Crypto Week and everyone's sort of enthusiastic and talking about it. Actually, there's a bit of profit taking this morning. What is the main tailwind right now that you're seeing for this industry?
The main tailwind is having this basis for institutional capital to enter. when you're looking at from the sidelines, there's still a ton of institutional capital on the sidelines. Why? Because although there's been talk for years, as I just said, about getting to this clarity, we're really finally seeing that momentum actually happen. We're seeing that momentum happen in legislation. We're seeing that momentum happen in bipartisan support and voting behind these key legislative initiatives. And that's key. All of the complexity that we saw behind some of these cases that have been dismissed, that we've just been talking about, that complexity is what breeds the insecurity. It's what keeps capital out. They're looking in, they're waiting for that moment. They see the promise of the technology, but they just can't get their arms around the regulatory insecurity they see and they sense. So now we're heading in that direction. You know, someone asked me yesterday, Crypto Week, is this just the crypto industry being loud? And I said, no, this is actually coming from Congress. That is a huge difference, and that's the momentum shift we're seeing. We have bipartisan support with the realization, knowing from years of work from many in the industry that we need to get that clarity, and we're heading finally in that correct direction.
Catherine, this week the House will vote on bills to regulate stablecoins during Crypto Week. Your expectation quickly of what's going to happen?
Expectation is that stablecoin is heading towards signature. That momentum's been there. It's something. It's a piece that you can understand. These are centralized intermediaries that should be regulated. It's hard to have a bipartisan disagreement about that fact. Yes, you can quibble about the language and how we write it up, but I think there's no disagreement that this is an area that should be regulated. And this is all on the heels of the Circle IPO, so we can see that moving forward. Clarity, that hopefully will get through the House, and then we'll see what the Senate does with that. Will they take clarity? Will they create their own? We've been hearing about the Senate version that's going to come out, so we'll see whether those two get squashed together or whether the Senate will look at clarity. And some of that will just depend on the politics that plays out over the next few days during the Crypto Week.
Catherine Dowling of Bitwise Asset Management, great to have you back on the show. Thank you very much. Now, coming up, we go live from Pittsburgh, where we speak with the U.S. Energy Secretary, Chris Wright. That conversation you do not want to miss, and it's coming up next. This is Bloomberg Tech. Pittsburgh is host to the inaugural Pennsylvania Energy and Innovation Summit. The event kicks off today with President Trump set to attend in just a few hours. For a look at the future of U.S. energy and tech, Bloomberg's Tyler Kendall is standing by. Tyler.
Thanks so much, Ed. And I'm pleased to say that I'm joined by the U.S. Energy Secretary, Christopher Wright. Secretary Wright, thank you so much for joining Bloomberg. And I want to start with one of the main reasons why we're here in Pittsburgh. There is this surging demand for energy to help power artificial intelligence. And the administration focuses a lot on its deregulation agenda. Do you think that you can accomplish your goals fast enough to keep up with what has been a surge in energy consumption?
I think we will. You're right, it's a challenge. I mean, the agenda of President Trump is to unleash American energy. The last 4 years, the Biden administration was more to shackle American energy. But you're right, there's rapidly rising demand. And what we as the government need to do is enable private businesses to build the things they want to build and invest in the things they want to build. We're not going to do this building ourselves, but we're going to enable private businesses to do it.
Well, I'm glad that you brought up private businesses, and to kind of put a finer point on this idea of urgency, we actually heard from Mark Zuckerberg yesterday, pledging billions that Meta is going to invest in data centers. But it is raising concerns about an energy crisis to fuel it. I'm wondering, have you spoken to Mark Zuckerberg or Meta about their plans?
Oh, we speak Meta extensively about their plans. And yeah, there's a number of the hyperscalers that have huge investment opportunities. We're excited about that. This is the newest energy-intensive industry to arise. That's what artificial intelligence is, energy-intensive industry, taking the most sophisticated, most expensive form of energy, electricity, and turning it into intelligence to transform our world and protect our nation. So yeah, Meta has huge investment plans, as does Amazon and Microsoft and Google and the other players in that space. And we need all of them will invest. It's a few $100 billion this year. In fact, you'll hear at the conference today announcements. It was 70 and I think now $90 billion just in the state of Pennsylvania.
When you hear big investments, though, and how much energy that is going to take, what's your level of concern, though, that there is going to perhaps be such a great demand? Can the U.S. really keep up with it?
Absolutely. You know, United States energy production, because of the shale revolution, just exploded in the last 10 or 12 years. Pennsylvania is a massive energy producer today. Pennsylvania exports more energy out of its state than any other state except for Texas. And Pennsylvania could massively grow its energy production, just doesn't have enough pipeline capacity to move that natural gas out of the state. So what's going to happen is more of that gas or additional gas will be consumed in Pennsylvania, turned into electricity, generated intelligence, and keep the United States ahead of China in the AI race.
So I want to talk about oil, and I also want to welcome in our audience that has just joined us. We are talking to the U.S. Energy Secretary, Christopher Wright. I'm Tyler Kendall. I want to show you some of these statistics that our analysts at Bloomberg polled, that the U.S. oil rig count has dropped 13% since late February. It's in the midst of its longest contraction since 2020. I know that there were some incentives in the reconciliation package, but what further incentives is the administration considering to help get forward these oil rigs to continue drilling?
Mostly it's get out of the way. You know, the Biden administration had 4 years, all of government approach to try to, as they said, end fossil fuels. Now that didn't work very well. We went from 82% of American energy coming from fossil fuels before Biden took office to 82%, exactly the same when he left office. Those are just simply the energy sources that power our country and our world today. But it's get out of the way of the marketplace. Right now, U.S. production is growing so fast, as has other places in the world, that prices are maybe at the low end of profitability for producers here. So you see a pullback in activity. You're going to see, with these new investments in economic growth in the United States, we're going to see growth in demand for oil. And of course, that'll probably bump prices back up a little bit, keep drillers active.
Well, you mentioned there perhaps a lower price environment. And part of this also, when we're talking about costs that these companies are facing, has to do with tariffs. And I wanted to ask you about copper in particular, which is essential to data centers and getting energy to help power AI. What sort of impact is a 50% copper tariff set to go into effect on August 1st going to have when we're talking about the cost for energy infrastructure?
Well, I think the biggest impact of that 50% tariff on copper is going to speed up copper mining in the United States. We have enormous copper resources here. We have some huge mines that have been trying to get going for years. We want to get copper production growing rapidly in this country. Copper, like steel, is just essential to everything that happens in the world.
Should we expect the energy industry to get some sort of tariff carve-out moving forward?
I believe the president plans no special carve-outs. He wants to reindustrialize the United States of America. There's a lot of tools to do that. Make it easy to invest in the United States, make it attractive to invest in the United States, and tariffs are an additional element of that toolbox.
I'm sure you're talking to industry, though. Is a carve-out on the table? Are there any negotiations underway for, say, the oil industry to get a carve-out when it comes to the equipment that they use in the field, like copper or steel, for example?
No discussions right now. We are hearing from the industry, and of course this is true. If you incrementally raise the cost of projects, that hurts the economics of them. We want to do everything we possibly can to maximize investments in the United States so jobs and opportunity come here to our country.
Lastly, I just want to ask you a geopolitical question, because we did hear from President Trump yesterday threaten a 100% so-called secondary tariff on countries that import Russian energy supplies. If that were to go into effect, what would that do to prices in the global energy market?
Something like that would likely drive oil prices up. I think President Trump's strong agenda there is to end the war in Ukraine. Our hope is that that large pressure will have an impact on Russia, and we can bring just a brutal war in Eastern Europe to an end. That's President Trump's goal, is prosperity at home and peace abroad. And the old formulas weren't working very well in that respect. So yeah, President Trump has very different tools, very different negotiating skills, and very different level of boldness. I think we're going to see tremendous growth in peace abroad and prosperity at home.
All right, we have to leave it there. U.S. Energy Secretary Christopher Wright, thank you so much for your time. This has been a conversation here in Pittsburgh on the sidelines of the Pennsylvania Energy and Innovation Summit. I'll toss it back to you.
Bloomberg's Tyler Kendall with U.S. Energy Secretary Chris Wright. Okay, coming up on the program, we're speaking with Nirav Talia, co-founder and CEO of Nextdoor. That conversation is up next. This is Bloomberg Tech. The neighborhood networking service Nextdoor has launched a redesigned app with features aimed at making the platform more useful, including safety, local news, and service recommendations. Nextdoor's CEO, president, and co-founder Nirav Talia joins us now. Now, look, let's be honest about this. I have a sense of deja vu because I think we've done a Nextdoor 2.0 before. So I'd say this is maybe Nextdoor 3.0. But give me the basics of why you've done it and what you've done.
Well, this is an entirely new Nextdoor. So whether we call it 2.0, 3.0, or 10.0 doesn't matter, because for consumers, this is going to feel and operate like a completely new app, but grounded in what Nextdoor has always cared about, and that is safety alerts, local news, and recommendations from trusted neighbors.
The thing that you and I have discussed a lot in the past is the scale of Nextdoor. So 46 million active users. Going forward with this new focus, what's the metric that you judge success by? Is it the user base or something else?
Well, it is engagement, and you're right. We have over 100 million verified neighbors who've joined Nextdoor, but the potential for Nextdoor, we believe, is much greater. We can and should be one of those social networks that has over 1 billion users, and so we have work to do. And over the last year, the work that we've done is to create a better product to enable more engagement, which will translate into more users, translate into more revenue, translate into profits, et cetera.
The thing I hear a lot in the moment in the domain of social media is time spent, actually including generative AI tools. So how do you do the conversion, somebody that is a registered user or active user to somebody that spends a lot of time on the platform, but using the new offerings that you've put in place?
Well, ultimately, the real ambition of any consumer application is to turn into a daily habit. And so whether you're coming every day for a few minutes or whether you're spending hours every single day, that's where we start. And today, many of our users are only coming weekly or several times per week. So the first thing we do is we ask ourselves, how can we turn this into something that you check the minute that you wake up in the morning and you check before you go to bed at night? Because there are so many things happening around us, and if things are happening on the neighborhood, they should be on Nextdoor. So that's been our focus and our ambition for the new Nextdoor.
That begs a very interesting, almost academic question, which is if you want Nextdoor to be the first thing someone looks at when they wake up and the last thing before they go to bed, who's Nextdoor's closest competitor?
Well, it's a great question, and I think our greatest competitor is really ourselves. When we talk about Nextdoor...
That's not really a competitor,
well,
come on.
It is, though, because we have an ambition and we have an expectation for what we can deliver to our users that we have not achieved in the past. And so we need to do better. We need to build better product. We need to enable stronger local community. There is no one else today who's built an entire geospatial platform based on where people live. There are lots of local services sites. There are lots of local news sites, but there's no one who's bringing it all together. So if we can do so successfully, we can be that indispensable, essential neighborhood network.
That brings in the local news component. I found this fascinating. Why go into local news? We're in an environment where the big social platforms increasingly are pulling back from news on the platform by choice. That was something that you were sort of jumping into head first.
Well, there's a great quote from the famous venture capitalist Michael Moritz that I just read a couple of weeks ago. And the quote is, "Local news is as important to a city as air, water, and gas." And we believe that at Nextdoor. Local news is what compels citizens to have civic discourse. It's what helps keep communities stronger. And so as part of this new Nextdoor, we're doing something that we haven't done in our 14-year history. We are inviting local publishers to come to our platform and use it as a distribution mechanism to take their great journalism and spread it to our users. And so we have 3,500 local publishers publishing 50,000 articles every week, and now our users can read that news, they can stay informed, they can engage in conversation, and it's something that isn't happening, to your point, on any of the other social platforms today.
Nirav, let's end by talking about M&A, because these strategies, which include local news, there are different mechanisms you can use to grow. How do you think about M&A and moving into the new domains that you want Nextdoor to win in?
Well, every single advisor that I've talked to, either as a private company CEO or as a public company CEO, has said the same thing. You have to operate your company as if it will be around forever, as a single independent entity. And so that's the way that we think about Nextdoor. As a public company, we always have to listen to any conversation that comes our way, but I will tell you, we are 100% focused on achieving our potential as a standalone independent entity.
Nirav Tolia, CEO, president, and co-founder of Nextdoor, back here on the program. Coming up, deals for AI startups continue as Cognition AI agrees to buy the remainder of Windsurf. We'll hear from both of the CEOs next. This is Bloomberg Tech. Welcome back to Bloomberg Tech. There is so much happening in the AI domain that is moving markets as well. Let's start with CoreWeave. CoreWeave pushing a lot higher. There's news out of Pennsylvania this morning that the company's going to invest $6 billion into an AI data center there. Now remember, Pennsylvania, Pittsburgh in particular, is all the focus this morning as Senator McCormack hosts that inaugural Innovation and Energy Summit. We're going to get to a lot more of that, but the stock really pushing higher, a lot of momentum for CoreWeave, up 8%. There is our top story, and it is a clear top story. NVIDIA and AMD shares both pushing higher after announcing plans to resume sales of some AI chips into the Chinese market. Why? They've secured assurances from Washington and the administration that they will get the approvals and licenses needed to do so. We will get much more into that throughout the remainder of this program. Now, as chip stocks saw on that news that semiconductors will be able to sell more of their product to China, the Trump administration is still working out its trading relationship with Beijing. Earlier, Bloomberg's Anne-Marie Horden spoke with Treasury Secretary Scott Bessent. Listen to this.
I can tell you the one thing that we do not want is a digital Belt and Road springing up around the world because other countries or China are substituting for our American chip manufacturers.
This is the same chip, though, that the Trump administration blocked with export controls in April. So why the change in policy now?
Anne-Marie, you might say that that was a negotiating chip that we used in Geneva and in London.
So this was part of the trade talks when it comes to Washington and Beijing?
Yes.
Was it a quid pro quo then? As you said, it wasn't, but was it potentially to make sure that you can get the licenses when it comes to rare earths?
Yeah, I think it was all part of a mosaic. They had things we wanted, we had things they wanted, and we're in a very good place. I expect to meet my Chinese counterpart, the vice premier, in the next few weeks.
So when and where will that meeting take place?
We're still working on that. The Chinese leadership has a big conclave at the beginning of August, so we're trying to work out whether that could be in a third country before or after that conclave.
Will the administration release the framework of the Geneva and London talks?
Well, we have released some of it, and I'll tell you that now, having settled on tariffs, on the export controls, we can move on to the next stage of talks. And I think it's very important, both for the global economy, for the U.S. economy, and for the Chinese economy, for us to move on and talk about China opening its markets and the increased domestic and consumer production there.
Are you hoping to get to that next phase before August 12th, when that's currently the détente between these two economies?
Yeah, I think we're in a very good place, and I tell market participants not to worry about August 12th.
That was Treasury Secretary Scott Bessent speaking with Bloomberg's Anne-Marie Horden. Let's get back to Pittsburgh, where the inaugural Pennsylvania Energy and Innovation Summit's underway, and we're going to speak with AI and crypto taking center stage of the energy and its digital future. Joining us now, delighted to say, David Sachs, White House AI and crypto czar, senior policy advisor to the president. David, welcome back. It's great to have you, as always, on the program. The focus is
good to be
NVIDIA.
Here, thank you.
Thank you, David. The focus is NVIDIA and AMD's ability to now sell, in a limited way, chips back into the Chinese market. Just your reaction generally to that.
Well, Ed, we still have a policy of not selling our state-of-the-art advanced semiconductors to China. And the H20 is not that. It's a heavily deprecated chip. And that's why the Biden administration allowed the sale of the H20 to China. And this is a continuation of that policy in the larger rubric of the trade negotiations that Secretary Bessent was talking to you about. So this is a heavily deprecated chip. I think that, like Secretary Bessent said, there are some things that China wants from us. There are other things we want from China. And this was all part of the overall trade negotiation.
David, you advised the president on AI policy as well as crypto policy. Do you have any sense of when he met with Jensen Huang last week at the White House, what case Mr. Huang made to the president that it was the right thing to get the American technology stack back into China?
Well, Jensen's been making the case publicly for competing in China, and I think there are a lot of merits to the argument. If you look at developments over the past year, Huawei has advanced very rapidly. They have a new technology called Cloud Matrix, which networks together 384 of their Huawei Ascend chips. Now, the Huawei chip is not as good as the NVIDIA chip. The NVIDIA chip is 3 times more powerful, but if you network together enough of those chips, you can brute force your way to a similar kind of result. And that is what Huawei has been developing, is this Cloud Matrix 384. So, and there have been reports, including from Bloomberg, that they've started exporting that technology, or they've been seeking to export it. So Huawei is becoming much more competitive. And if you give the whole Chinese market to Huawei, it's a huge subsidy for their R&D. right? And it basically forces Chinese companies that might be willing to use the H20 to use the Huawei chip and to basically figure out the bugs, work out the kinks of the cloud matrix system, and help Huawei scale that up. So I think there is a compelling argument here that you just don't want to hand Huawei the entire Chinese market when NVIDIA is capable of competing for a big slice of it with a deprecated, less capable chip. Again, we're not selling our latest, greatest chips to China, but we can deprive Huawei of basically having this giant market share in China that they can then use to scale up and compete with us globally. So I think this policy is nuanced, and I think it makes a lot of sense.
The reporter you were referring to that Bloomberg had was that Huawei was going out to some of the Gulf nations and also some of the Southeast Asian nations and offering prior generations of their chip, but also the cloud matrix that you mentioned. The concern being that in dealing with third countries, that there'd be some Chinese access to other nations' technology. How involved have you been, David, in these kinds of talks, in framing the president's thinking that actually just having direct access to lower performance compute is okay with China right now?
Well, look, I don't want to. I'm not going to discuss what I talked to the president about, but I can tell you what I think, which is the Bloomberg story discussed how Huawei was basically trying to make available the Huawei Ascend chip, which is their current chip, which is basically put together in a rack system with Cloud Matrix to create a viable competitor to NVIDIA. And I think it is a viable competitor. I think NVIDIA and AMD and other American companies have a better product. But if we don't compete across the world, then we will hand the market to China. And one of the reasons that the president went to the Gulf states on that trip is to encourage business relations between the U.S. and the Gulf state. He signed massive investment deals. And one of the deals that we signed was this new AI acceleration partnership, where we want to create a pathway for the Gulf states like UAE to buy American technology, to buy American chips, and to create data centers on the American tech stack. And I can tell you that this, I don't quite understand why this has proven to be so controversial in Washington, but these nations, like the Gulf states, they have two choices. They can go with an American technology or they can go with a Chinese technology. And if you don't let them buy the American technology, you're pushing them into the arms of China. And a lot of people said, well, China won't be ready to sell for years, but now we see that there are reports that Huawei is out there trying to sell and export the Huawei Ascend chip. So I think it's very important that we enable our American companies to compete in the global market, that we don't tie their hands, that we don't hobble them, because again, it's a zero-sum game. That market share will either belong to our companies like NVIDIA, or it's going to belong to Chinese companies like Huawei. There's a very simple test for this. Just look at market share. If 5 years from now, we look across the world and we see that NVIDIA or other American companies have 80% market share, it means that we won the AI race. But if we look across the world in 5 years and see that Huawei has 80% market share, then it means that we lost the AI race. So I think it's very important that we do everything we can to encourage American exports. To be sure, we can name our security standards, but this is a very easy trust but verify situation. The chips that we're talking about are really mainframe computers. They're 8 feet tall, they're 3,600 pounds. It's very easy to send inspectors into data centers and count the server racks to make sure that they're where they're supposed to be. So the security concerns can be addressed. I understand that there are some security concerns, but I think they're very easily handled. And what we need to be doing is making sure that we win the AI race globally by making American technology the global standard and not creating a Huawei Belt and Road.
Live on Bloomberg Television and radio worldwide, we're in conversation with David Sachs, Senior Policy Advisor for AI and Crypto, the AI and Crypto czar. David, I wrote in my newsletter earlier this week about the analogy that Jensen Huang has been using, that the American technology stack should be akin to the US dollar as the world's reserve currency. That's how he would like the administration to approach it. Do you share that view and see some truth in that analogy?
Well, here's the way I see it, and this is really, I think, a Silicon Valley view, because I've been a founder and investor in Silicon Valley for 25 years. And what we see is that the winning technology companies are always the ones that create the biggest ecosystem. They have the most developers on their platform. They have the most apps in their app store. And so they work very, very hard to create a partner ecosystem. And I think that the United States needs to do something similar with the American technology stack. We want the most other countries using our technology, because, again, it's a zero-sum game. And it's not just the chips, it's the operating system that runs on those chips. It's the AI models that then are run in these data centers. We want all of that to be American-made and American-powered. And, look, to be sure, there are security concerns and we can address them. I don't think that's that hard. But if we hobble our American companies and don't let them participate in the global market, again, we are playing into China's arms and playing into their digital Silk Road. So I think, to me, this is a pretty easy question. I think we do want American technology to be the global standard. It is a little bit like the dollar. There is a network effect there. The reason why everyone loves the dollar is because they know that everybody else will accept it as well. So we do want to have the strongest dollar. We want to be the reserve currency, and we do want our technology to be the global standard.
David, Bloomberg reported this morning that on July 23rd, the president's going to speak in an event titled Winning the AI Race, which you and the rest of the All In Pod team will be hosting, essentially. I guess that's going to be a moment where we'll have a fuller sense of what the president and this administration's big picture AI policy is going to be, what the big goals are going to be.
That's right. So the president will be giving a keynote address at that. It's a one-day AI conference in Washington, D.C. on July 23rd. It's co-hosted by All In and Hill and Valley Forum, which is also a D.C. and Silicon Valley policy group. And the president, I think, will be giving his first major address on the topic of artificial intelligence, building on the remarks that he's giving here in Pennsylvania today, which are also AI-related and related to energy investment, the kinds of investments we have to make to power the next generation of AI.
David, you've been speaking there in Pittsburgh this morning. What's the main focus on the energy side of this AI story? Energy security is a national security priority, but just simply whether we will have enough energy resources to power the goals of Meta and the other hyperscalers.
Well, Pennsylvania is a huge energy-producing state. I think it's our second biggest energy-producing state. They have abundant natural gas, which I think in the near term is going to be the power source for these data centers. I think, in about 5 years, we could start seeing nuclear scale up, and the administration believes in that too. We want an all-of-the-above approach. But Pennsylvania is very big in natural gas, and there are major investments being announced here for more basically fracking, for more grid infrastructure, for more power generation. All of those things are needed to power data centers. AI runs on GPUs that are incredibly power intensive, and these data centers of the future are going to need more power. And the one area, I think, where America is a little bit behind, I think we're winning the AI race pretty much at every level of the stack, except that the size of our power grid has not increased very much over the past decade. If you go over to China, they've roughly doubled the size of their electric grid over the past decade, where ours has only gone up by a couple of % a year. So this is an area where we need to make major new investments, and the president is coming to Pennsylvania today to announce many of those investments. And I think this has been a major priority of the administration, and I think you're going to see a lot more of this.
White House AI and crypto czar David Sachs, thank you very much for coming back on Bloomberg Tech. Okay, coming up, deals for AI startups continue as Cognition AI agrees to buy the remainder of Windsurf. We're going to hear from both of those CEOs next. This is Bloomberg Tech.